Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to a very festive pre-Memorial Day weekend episode of the AJ Brown Show. Today is May 23rd. My name is Cyprian Francis, and with me, as always, Mr. AJ Brown. I imagine you were deep into the Trump tweets and the Apple news this morning.
I was something. I was late Anyway, yes, there's a lot going
Did you
on.
see?
A
Did
lot
you?
going on.
I mean, that was pretty much the early market mover. This really the major news of the week to move the market more than 1% versus, like we talked about last week, a little bit of chop. I would assume the majority of the week.
Yeah. Today's pullback is quite interesting, especially compounded with all the stuff going on with, long-term interest rates and debt and all that discussion this week. You got to remember, Sip, this week was the quiet week of the month. When we take a look at the economic calendar, not much was going on this week. I mean, Tuesday we had a whole bunch of Fed representatives speak, and they didn't really say much. But yeah, there's no economic news to point to, so it's whatever comes out of the tweets.
Yeah, and I think bonds was also in the news a lot, which
Mhm.
maybe we can go into detail because I still don't really understand how it has an impact, and maybe the average consumer doesn't, because one day they're moving the equity markets and the next day they're not. In addition, this big tax bill was also something that I read about. But
Mhm.
as we've talked about in the past, because of the nature of the current administration, who knows when the president's going to feel like coming up with a tweet. And let me just pull it up real quick because I thought it was funny on my end of what he actually tweeted. If we want to just take a look at that
Yeah,
real
pull it up.
quick,
Pull it up.
because I mean, our guy is just the way he approaches these things is just entertaining, right? So I have, and this is a quote from Mr. Donald Trump. I have long ago informed Tim Cook of Apple that I expect their iPhones that will be sold in the United States of America to be manufactured and built in the United States, not India or any other place. And if that is not the case, a tariff of at least 25% must be paid by Apple to the U.S. Thank you for your attention on the matter, Mr. Cook. Apple down, I don't know what it is now, a couple percentage points, bringing the whole markets kind of, giving the case to a bit of a pullback that maybe we might have needed.
Yeah. Oh, I definitely think, we talked about it last week from a technical perspective that uh, we need to see where the next retracement takes us, where the next pullback takes us. And that's going to be ever enlightening as to how we should invest pretty much for the rest of 2025.
All right. So then heading into, let's do some analysis of the S&P, because I do see a gap up on your chart, and then I would assume a few days of mediocre increases to the upside. We've got a signal, right? You've got your little red arrow, and I'll go ahead and throw the link to how everybody can access that. But I saw in your notes that this might just still be a bit of a blimp of something that might be going to the upside, or we're going to be in this middle area for a while, not really knowing what's going to push the market up or down.
Yeah, let's look at this technical kind of. So, like you said, we got our end of day signal. This is a 3 and 5 day exponential moving average. So, what this signal is a confirmation of is whatever the highest close was preceding it is our top reversal. And, sometimes these confirmations are, for lack of a better way of describing it, wishy-washy. So I always look at the analog version, but this is clearly a signal, right? It's not one of these ones that kind of loiters around the slow moving average. It really did cross down. So we're going to believe in it. So if I take my drawings, a couple things happened because of that. So May 19th, this past Monday, we've logged a top reversal. What that means now is we've had two top reversals and two bottom reversals since the April 8th start of this new trend direction. That means we can call this trend technically mature. Now, it gets more and more mature as more reversals log. So this is technically a mature trend, but usually, and the reason why I'm emphasizing technically, usually we can draw our lines of support and resistance, and they fit pretty well. But because of kind of and again, I believe it's what you hinted at. It has to do with, the fact that we're governing by tweet these days. So there's a lot of, crazy movements. In fact, these first two moves of this new trend direction are very indecisive. This first move from April 8th to April 9th were all about, taking away the tariffs that had been put in place for the previous month. So it's kind of hard to do technical analysis when there's all these like variables being thrown at us unexpectedly. But still, technically, we're in a mature trend. So I started to draw support and resistance lines of this new channel. We're already down at this level of support with today's open. Today might be another doji bar. Doji bar means the close of the day and the open of the day are at the same place like it was yesterday. But what's all this excitement besides the fact that we can now call our trend direction mature, whatever that may mean? We now are looking for the next retracement. So we had this move, and this move from April 21st until May 19th was definitely a rally, a market rally. The question is what is this new market going to be? And where we get our next bottom reversal will be all telling. So, for instance, if I take a look right here, if I pull back to this magenta zone and go up, then I'm buying into, an up market, an uptrend. I'm actually even, I've told my program participants, I'm going to tell all of you too, I've got planned out if we get our reversal in this magenta zone, I've got about I've got five swing trades that I've been watching, underlying symbols that I could then use a stock replacement on to kind of leverage and multiply the movement. I've got some swing trades ready to go in my back pocket, some underlying symbols that look like they're setting up. I'm going to be following them as we pull back. Now, if we overshoot the magenta zone and we get somewhere in the red zone, then I'm sticking with my premium selling because this is all about sideways chop. And gosh forbid, if we drop all the way into this green zone, it means that trend reversal is upon us and we're actually going to be looking at more of a recession and a pullback. And we should be thinking about, you know, changing our trend direction and we're actually going to continue to go down. But I have no idea where we're going to reverse. So I'm just keeping my eye out for where the next bottom reversal is.
Yeah, we might not necessarily know what the catalyst is because the catalyst to the first drop was very much self-inflicted, like we've talked about in the past. Today's drop is very much self-inflicted with the governing body, basically saying, "Hey, we're going to have to suck it up for a little bit because these trade indifferences need to change, and this is how we're going to go about doing it." Do you see, because we've been getting economic data that hasn't been too good or too bad. It's kind of been middle of the road. Could the next couple of months of data bring us down to these levels because now we're past the Q1, Q2, where maybe some of that data is a little bit more settled in?
You know what? I think it's not going to be any of this short term data, right? I don't think, you know, things like inflation. I think people are going to be focusing on this bigger picture, which is, and we got a reminder this week. We got Moody's, who was the last of the three ratings agency, right? These third party companies that rate like countries or sovereign nations as to how well their economies are working. So I don't know if you guys remember, I wrote it down here. Back in 2011, right? August 5th of 2011, the first of the credit agencies decided to downgrade the United States. That was Standards and Poor's, S&P. They downgraded us from the top credit worthiness to the next level down, right? And that was during the Great Recession, and they never returned our status back up. And then the next one was Fitch in August 1st of 2023. So as we were starting to recover from the COVID, and if you remember, to recover from the COVID, we had to spend a lot of money, both because, everything had stopped. So the whole economy had come to a standstill. So you had to keep your population going, but at the same time, you had to keep the economy going. And this is really where you hope that governments step in. But when they step in, it usually costs a lot of money. And so Fitch downgraded us on August 1st of 2023. And then just on May 16th, right, last Friday, Moody's announced that they're downgrading us. That's the third. So all of a sudden now everybody agrees the United States has fallen off, a notch in credit worthiness. And mainly it's because of all the debt, the huge amount of debt that we have, right? And so that's been a whole discussion as well,
which isn't improving much, given where bonds are, and the rhetoric from President Trump about directly at the Fed saying, hey, you guys need to lower rates, right? So that directness is a little bit more new age than it has been the past couple of years. But the Fed is kind of sitting firm, and I think the expectations are as well.
Yeah, it has nothing really to do with inflation. So the Fed can control overnight spending rates, and to some degree, they can actually control through quantitative easing and tightening. They can control, bond purchases. But the big thing is that except for the quantitative tightening, quantitative easing by the Fed, a lot of our economy is based on these longer terms, especially the 10-year bond, right? We calibrate mortgage rates on the 10-year bond. We calibrate even car payment rates. Some of the biggest purchases that we make as individuals are all calibrated on whatever this interest rate is, right? And with that Moody's downgrade, what that means is that we're probably going to have to, people are not going to want to buy our debt the way that they have. And if people don't buy the debt, the US government has to give more incentive to buy the debt. What does that mean? That means that they're willing to pay more to have that debt financed, right? When you can't get somebody to give you a loan at a certain rate, it means that your credit isn't worthiness, right? You're not good. You haven't proven that you can pay back, whether it's history or what, you haven't proven that you can pay back your loan. And so you have to go to banks that you pay more to borrow the money. Well, that's basically the same thing, right? People aren't going to want to buy US debt. And so the US government has to start paying more to borrow the same amount of money than they did before. And that just cascades through the whole economy. And we're set in the next 10 years to have 120% debt to the amount that we do in domestic product every year, right? Our debt is growing more than we actually do in business. That means about 1/3 of all the tax dollars that we give the US government is going to be to paying this debt service. And that's, that's the end of empires, right? That's how the Roman Empire and the British Empire wound up going out of business, right? So
Yeah.
it's not a very good picture.
Yeah, and it was one of the I guess you touched on the 10-year. One of the tweets that caught my attention this week was the 30-year hitting 5.15, the highest level since 2007. So anything that references the recession or data from the recession always captures my attention. And I think this, when this happens in the overnight session and the morning, trade equities US session opens, this can kind of have an effect on where bonds are. So I guess we're going to have to continue to keep an eye on it. But in terms of the quantitative easing, you're saying that the Fed hasn't, changed their stance much. They're continuing to maneuver those levers in the background.
Well, yeah. So here is the Fed, right? So the Fed purchased over since 2008. The Fed has been on these different purchasing sprees. Usually it's when there's been a big problem. So for instance, the big purchasing spree happened in 2008 when the Fed needed to help bail out the economies from the whole global crash, and then again during COVID. And so the Fed wound up buying with Fed money, which is just created out of the air, buying these bonds, right? They bought mostly like really good, coming back here, really good long-term bonds. And so if you think about it, if you have this big customer come in and say, hey, I'm willing to buy the debt, what happens is it, because there's somebody willing to buy that debt, the government doesn't have to pay as much. So the interest rate, almost artificially comes down. Now the Fed is trying to sell that debt back. And this gives you an idea of the Fed's debt, right? They're, they take these pauses of about 2 or 3 weeks, but then they sell a huge chunk back. Now, if you have somebody who's kind of now offloading their holdings to the market saying, I don't want your debt anymore, that's going to cause interest rates to go up. So at the same time, when other customers like other countries and even us as individuals, you can go and buy treasury bonds as an investment, right? Us as other individuals, we're like, oh my gosh, the US keeps, accruing debt. They may not be the best people to be, funding with this crazy amount of debt that they're accruing. So we're maybe going to pull back from buying US debt because maybe it's not as secure as we thought it was. And at the same time, the Fed is offloading their debt. Well, this is kind of compounding the increase of those long-term interest rates.
Yeah, so we're definitely gonna have to keep an eye on that, and any of the rhetoric that may be coming soon, because the last couple of Fed meetings was a lot of I don't know what the effects are going to be. We're not going to respond to that, but they can only do that for so long before they need to give us an answer.
Well, and the Fed, you got to remember, the Fed has to be reactionary. That's the whole purpose of the Fed, is to be reactionary to inflation pressures and to employment pressures here in the United States. So really, we shouldn't be looking so much. The Fed is going to be actually quite predictable. Whether they're fast or slow at responding is another story. But the fact is that our debt is out of control. So you almost have to point your eyeballs now, instead of to monetary policy adjustment, to fiscal policy adjustment, which is what's happening now with this new budget bill, and also with tariffs. That's the whole fiscal side of the thing, right? So a lot of eyes are on this fiscal side of the thing.
Yeah.
Of the equation.
And that's what we do here at Trading Trainer. We keep an eye on that, and we try and find ways to take advantage and find opportunities. For anybody joining us for the first time, AJ loves options, right? Options provide you a way of, making money in the market, whether it goes up, down, sideways, whether it doesn't move, whether it moves a lot, whether it moves a little. And it brings me to a question that I have for you that I came across a pretty interesting stat. And that's the S&P 500 has surged to 2.3% short yield interest, the highest in 7 years. And so when I see something like that, I start to immediately think options may be a good tool to try and get in where the smart money is, because most retail investors are not the ones that are creating the short interest. But in addition to this statistic, I saw another one that was very interesting, and that is basically the divergence between retail and professional traders, between the short interest and the long interest being the highest it's been in forever. And so I guess it's that concept that hedge funds, the bigger money, are all taking short positions in this little dip while the retailers are still buying. But we, as being members of the trading trainer community and knowing what tools we have, we could be utilizing these tools to be on the side of the smart money. But when you see some statistics like this, does it concern you? Do you want to give a warning to the retail investors to say, hey, you guys need to pay attention and hedge yourself, protect yourself, and take on some of the strategies that we teach?
I mean, I've been ringing that bell for like the last 20 years since Trading Trainer has been in business. The scoop is that the big money, the I call it the market movers versus market makers, the guys that can move the market. And if you look at the amount of money in the markets and the amount of money controlled in the market, the controlling interests is actually a small, right? It's this big tail, like 10% of the people who control the money control 90% of what's going on. And so they leave breadcrumbs. And so you almost want to follow in their footsteps. I'll tell you what's happening here, and you're absolutely right. Retail investors keep looking for these, like, they're very emotionally driven, and they keep looking for these, like, the market's going to keep going long. And so they look for these plays like, hey, I bet you this one's going to go high. And a lot of times their decision makings are purely emotional. And so they're putting money in, and the few market movers out there see this, and they look for opportunities in order to basically move that money from the retail investors' pockets into their pockets. And now they're not shorting so much that they're causing the market to take a big nosedive, although, we'll see what happens. But they're doing it just enough to keep the interest of the retail traders and the hope, right, that a particular stock or particular ETF, a sector, even the whole market might go up. So they're kind of like baiting them, right? They're like letting them have this sense of hope. So they put their money in and then just, siphoning it their way. So what are we doing here at Trading Trainer? I mean, we're kind of on the side of the market movers. We're offering, with our premium selling, we're offering those insurance things, because retail investors know, just like commercial investors, market movers, they know that they can hedge their positions, right? So they buy these short-term contracts and options in order as a form of insurance. And what my folks are doing is they're the ones who are selling those insurance policies to folks. So, being in the business of offering market insurance is really what premium selling is all about. And there's a huge demand. I mean, can I just pull up the VIX really
that's
quick?
always something we like to touch on.
The VIX kind of gives us an overall idea of, that market insurance industry. You can see, you can't even see the lower level anymore. There it is. You can see that we're above our mean. We're not quite above the unfounded, founded fear threshold, which is at $26, but we sure are kind of knocking on that door, but we're definitely above the mean, basically saying that, hey, people are paying top dollar for insurance. You should be in the insurance business. I mean, the market is telling us what type of trading to
Yeah,
do.
and I imagine, I mean, I'm looking at the signal that you just got, and I'm imagining that this is something that you and the community discussed this past week, because we did drop under that median, and every time I see it hit that like 16, 17, 18, I think about the discussions we have and still think about the uncertainty. I mean, every other day it's either good news or bad news, or one's squashing the other, and so that can only lead to more uncertainty, which makes this trade right here a little bit more appealing. And then just the premium selling in general, because as the uncertainty increases, those premiums go up. So to anybody watching for the first time that wants to kind of see a breakdown of AJ, I mean, we almost need to come up with a cool name for this, because it's a unique trade, and it seems as if,
Oh, besides just calling it the VIX
yeah, I
hedging
mean, it's
trade,
just
that's
every couple of weeks, it just presents a really good opportunity for itself. So we'll do some due diligence on our end to see if we come up with a cool name. But if you head on over to the YouTube channel and hit the I don't know, search VIX in the videos, you should get a couple of videos where AJ really breaks this down. Okay. I think with that said, AJ, you know, if anybody's watching for the first time, I did throw the link to AJ's quick links in the chat. And so this has got all of AJ's goodies, the social pages that you can go and follow, show some love. We've got AJ's workshop, right? So if you really are, you know, liking what you're hearing with some of the stuff that we're throwing out there with the stats, and you want to get on board and you want to position yourself to win, check out the workshop. Head on over to the free workshop. Here it is. If you're interested in joining the community in general, there's this join program button. We've got coaching options for you. And, you know, AJ's got a lot of good stuff in general over on the website. So head on over to the link, check out what you like. And, you know, we've got a healthy list of some names that we're going to run through the rest of the show, heading into the weekend. You know, I think Mondays we've got a closed market. So Friday.
Yeah, it's only going to be a 4-day week next week.
Something when Donald Trump wakes up he must just wake up on Fridays and be like, well, look, how can I mess with everybody heading into a holiday weekend to get my messages out there? And that's what's happening today. All right.
He might not wake up, you know, he had that big party for all the crypto bros. And I'm not sure, you know, that was people were who bought his meme coin, the number, what is it, 225 top investors of his meme coin got to meet with him in person. So, you know, the guy's been partying a little bit. Maybe he'll calm down over the weekend to get some rest.
And as we talk about crypto, Bitcoin hit a new high this week, and it's starting to feel more like a flight to quality than it has been one of those tech plays in the past. So not that we in the trading trainer community are doing too much crypto stuff, but I know that people are, and it's always a topic. Did you see?
I think as of now, and this is again a note for all those people watching us, you need to have a crypto wallet. Go to Coinbase, go wherever you want to go to get your crypto wallet. But one of those accounts you need to have these days is a crypto wallet. There's no getting away from it, right? So I think make sure you go, and it doesn't cost anything. Just get yourself a crypto wallet.
Yeah. So we'll keep an eye on that. We're going to take a break here. We are streaming live. So if you guys have any questions to any of the stuff that we're going through, feel free to throw it in the chat. I looked at some of the names that we're going to be looking at, some good stuff there. So sit tight, folks. We'll be back in a jiffy to run through some ways to take advantage of the markets using the beautiful, wonderful tool, so-called the option. So sit tight, folks.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home. giving you the webinar. I need you to sign up below and meet me in a few minutes.
You know, I didn't see it in the notes, but today is the third Friday options expiration day today.
Actually, options expiration was last
Okay,
week.
so
This is the fourth Friday of the month.
oh, so this is one of those where we've got 5 Fridays in the month. Interesting. And
Yeah.
so
Yeah.
because
Yeah.
last week was options expiration, after options expiration, is this week the week that you've kind of been looking to put on some positions?
Oh, absolutely. I'm looking for any sort of a lot of folks. What we do, I'm going to sum this up for folks. What we do is we find an underlying symbol, right? An underlying symbol that usually is range bound between a level of support and level of resistance. And we decide to get into that symbol, whether it's going long, going short, or using substitute call or put options, basically establishing ourselves by buying one of these positions. It's called our initial covering position, and it allows us for months to come to then be in that selling of premium business. So what we do is we have these symbols. We basically become kind of an insurance broker, and in order to be an insurance broker, you have to have these positions in place. So all we're doing really is looking for when we can sell, when is the best time to sell the next tranche of insurance against these positions that we have in our portfolio. Now, if any in May, if any of those positions, if anybody decided to exercise their position that we sold them, right? That means they're basically using the insurance policy that we sold to them. If any of them exercise that, then that initial covering position goes away and we wind up with a chunk of cash. So there's a portion of our portfolio every month that we have to like start a new, find a new symbol or even go back into an old symbol to start that insurance. But the rest of them, it's all about taking that exact position and just looking for the next time to sell insurance. It actually becomes quite easy to manage your portfolio because you're not always looking for the next best trade. All you're doing is looking for the next best time to sell insurance to those people who want to buy it.
And these tranches have time limits and/or right, as short as a week, a couple weeks, as short as a year.
Yeah, as short as a couple weeks. Usually it's about 3 weeks.
Yeah. All right. Well, maybe we can. That was a great explanation. The discussion to practice with some examples because I really liked some of the names that I saw on our list this week, and so your pick of the week, a name that you're keeping an eye on this week. I think we covered American Airlines last week. This is a counter to that, and so you're seeing a potential opportunity in Southwest Airlines, ticker symbol LUV. What do you like there with the setup?
Yeah, let me go ahead and switch so these are all those indicators that you can go download for free from our site. I'm going to switch from the ones I use to analyze the broad market to the ones I like for these individual stock plays. So Southwest Airlines, just like American Airlines, and I am being careful about not putting all of my investments into airlines. There's a couple of different sectors that are great for premium selling, but right now the airlines are just, ripe for people to sell insurance against. And so to set up that initial covering position, we actually got a signal on Tuesday, my birthday, by the way, on Tuesday. And so on Wednesday, we got the follow through. And what this was a signal to go ahead and either short some Southwest Airlines, or even better, Southwest Airlines has a fantastic substitute put option. It's the Southwestern Airlines January of 2026 $40 put. You get a little bit of leverage. You also get to, instead of having to short an investment vehicle, you're going long in investment vehicles because puts basically move dollar for dollar, especially when you buy them far out in time and deep in the money. They move dollar for dollar with the underlying symbol, but only inverse. So if the underlying symbol goes up a dollar, this substitute put option I gave you will go down a dollar. So you make money on the stock going down. And basically, our goal here is to go ahead and buy those put options while we're up here. And then as the stock goes down and gives us a signal, the signal to sell the put insurance is whenever we find a bottom. So the next time we get a bottom, it might be, I mean, over here it was something like 2 or 3 weeks. It might be 2 or 3 weeks from now. When we get a signal that it's our bottom, that's the best time to sell the put insurance because we're going to get the most money for it. And, that's what we're setting ourselves up for. Same with American Airlines. If I bring you back over to the symbol that I looked at last week, AAL, we got kind of the same picture. American Airlines I like because it's kind of lower dollar value. Southwestern Airlines I like because it gives us these beautiful patterns that give us plenty of time in order to, respond to the signals, sell the insurance, set up your insurance business, whatever it be. Premium selling is really where it's at when it comes to airlines right now.
Yeah, and this is a great example of using option edge of a potential pullback in a name without necessarily having to put up all the short side capital, just due to the nature
Exactly.
of how options work. So AJ's pick of the week: Southwest Airlines, ticker symbol LUV. We've got 4 names in our speed round here, AJ, from a nice healthy mix of lovely viewers and fans from all across the world. So let's go ahead and dig into it so that we can get everyone set up for success so that they can have themselves a wonderful Memorial Day weekend. All right. First name is Marie from Calgary, Alberta, Canada, interested in Barrick Mining. B. Would this be considered a gold, or do they follow the gold pattern, Barrick, or it's completely separated metals concept?
Yeah, this is a Canadian company that's into mining. Gold and copper are their big metals, but when you're a mining company, I think you come up with ways of dealing with whatever comes your way. Um, okay, so I think I see what you're thinking about. I like that Barrick Corp is trading in the $18 to $21 range. That's a great price for premium selling symbols. I'm going to zoom back into the 3-month picture. It does look like we've got some sort of channel forming. There is some gapping. I see a dividend coming. But let's see if I could draw here roughly where we've got some support and resistance, maybe somewhere around $17.75, maybe up as high as something like $20.50, something like that. So you think about this as this is the range that this stock is trading in between. And so, yeah, maybe we missed our opportunity. It looks like we got a signal on Monday of this week. And then on Tuesday, looks like we've kind of missed our opportunity to do any sort of initial setup. If you, Marie, got into this trade by buying some of this stock or buying a call option, I'm so curious. This is not one that's completely on my list, but I'm going to jump over here. Again, this is one of those free tools you can have access to from our web portal. It's called our options lookup tool. I'm going to go ahead and put this symbol in. I'm just going to look to see about the liquidity on the options chain. I'm also going to, I'm deciding how I want to use this tool. I'm going to look for a substitute option. So I'm going to go all the way out to the January 2026 series, trading every dollar. You can't go wrong with that. An option that trades every dollar in strike price gives us that granularity to really use our option strategies. And you know what? I see a whole bunch of trading on this. And so that tells me that there's a lot of people interested in the options market. It means that we wouldn't find ourselves in trouble. Okay, now that I'm, one of the things we have to do is evaluate the option chain to make sure we can use our strategies. This one passes those tests. I think unless you got into this either by buying a far out in time, deep in the money call option, or just buying the stock in lots of 100, unless you did that earlier this week, I think you have to wait until we find our next top, wherever it may be. And that also might give us clarity on where our level of resistance is. But find that next top and then either short the stock or buy a substitute put option far out in time. I'm thinking January 2026, deep in the money, and then trade it on the way down. If you did go ahead and buy that stock or buy that call option, then your top reversals are where you're going to sell the call premium. That's going to be your best price for selling call premium. You may even decide to buy a protective put somewhere around your break-even price and collar this position. I think this is going to be a great stock no matter how you attack it. I think I give you the thumbs up on this one.
Yeah, and the metals market has definitely been a hotter market this year than in the past. And we have covered it a few times. Even had a special guest to come give us a little bit of insights on what's happening in the metals. So thank you for that, Marie. Our second name, man, we've got a nice little breadth of options here, or stock names here today. So Michael in San Francisco, California is interested in Hims and Hers Health. Ticker symbol HIMS. AJ, I tell you, I get so many ads from this commercial for balding. That's how I know about Hims. That and erectile dysfunction are the two
erectile dysfunction, the ED play. So this is one of those for pay. So I don't think you use your insurance, although you may be able to. But this is one of those places where you call in, you meet with a doctor through a Zoom meeting, and they specifically focus on things like hair loss. I think now they're even going into the weight loss drugs, erectile dysfunctions, these common kind of lifestyle type therapies that people are really, they've been proven safe, and people are really going for it. With that said, I'm going to zoom out a little bit. Oh, wow. Okay. So Hims has a huge move, and they've tested it now 2 times with support. It looks like they spend a lot of time around $25 to maybe $35, but as of late, they've been popping twice now up to $65, usually right around earnings. We did get a signal for shorting Hims, but because of this huge dollar amount, right, going from $65 all the way back down to $25 and back up, I mean, that's not what we would call a premium selling play. This is more of a trend reversal. I could see going on Hims and just doing put options, right? Probably 3 to 6 months out in expiration, and maybe picking a strike price that's maybe 2 to 3 in the money would be kind of a safe. If you know how to trade out of the money options, you might consider that, but there's a lot more analysis and nuances. Don't just go trading out of the money options on a whim. If you're not experienced with how to select the right options, how to select the right expiration dates for those out of the money options, stick with what we call stock replacement options, which are 3 to 6 months out, maybe 1 or 2 increments of strike price in the money, and trade this movement back down. I think that's what I would do. And by the way, that trade could also, if you stop short, like if they stop at 45 bucks or 50 bucks and start to go back up, you could actually transform or adjust that position easily into a premium selling position. But I think more than likely what I would do is get that put or short that stock at this time, and then allow that thing to drop and decide what to do there. More than likely, you'd just liquidate that and take the money and run. This is a directional play.
Yeah, I'd be curious to see what any of the legislative changes might affect them, because there's a lot of chit chatter out there, and even learning a little bit of what drove the market up most recently. So thank you for that. Michael, moving on to our third name. Thomas out of Jackson, Mississippi, is interested in U.S. Steel, ticker symbol X. Steel is a name they're throwing around a lot with all this tariff chatter.
Yeah, if you look back, interestingly enough, about U.S. Steel, if you look back to the first Trump term, 2016, 2017 to 2020, 2021, he started to do some of that tariff stuff on steel, especially getting that steel to, basically drive the market in steel. And that was one of the big benefits. And in fact, during the Biden term, they left that in place because it did benefit the steel. Now, if you look overall, maybe, and there's still discussion about it, but maybe, yes, you benefited this one industry, but every related industry wound up getting a little bit of detriment. But with that said, we like U.S. Steel here. We've been selling premium on U.S. Steel for almost 20 years. I'm a little bit, again, like Sip mentioned, when it's in the news, it kind of gets, the focus of the everyday person, and that could cause blips in the price action. One thing we like as premium sellers is boring stocks that stay range bound. That's kind of the nerd term. Stay in a certain range between a couple of numbers. And when it starts to get in the mainstream media and people are talking about it, that means that more people might send it out of that range. So we kind of like to go towards boring stocks. With that said, it looks like U.S. Steel, has a little pop to its step right now. I'm not sure I want to short U.S. Steel, and I think that I missed my opportunity. Here's what I think you should do, Thomas. I think we should hold off on doing anything with U.S. Steel. I think that there's a little bit lower hanging fruit out there. But if U.S. Steel does pull back, maybe to the high 30s, and then tells us it's going back up, that might be the next opportunity to get in and buy some either U.S. Steel stock or buy some substitute call options that are far out in time, very deep in the money. I could see doing that, but right now with where U.S. Steel is trading at 45 bucks, this is not the best opportunity, and I don't want you shorting U.S. Steel or buying put options. So I think we wait. We turn our attention to something else, maybe once a week, check in on U.S. Steel. And if we do see a pullback again, somewhere to the mid to high 30s, then we think about, starting a new position on U.S. Steel.
Yeah, definitely in the news. Every other blurb is tariff this, tariff that. Oh, 35% tariff, but not tariff on cars or tires or rubber, but tariff on this. It's just really all over the place. And I can only imagine that, U.S. Steel here is kind of stuck in the whirlwind of that. And that's not wise for us investors to be, trying to pick those names. All right. Fourth and final name of the day, Caroline out of Denver, Colorado, interested in Sunrun, ticker symbol RUN, a name I believe we've looked at a few times in the past.
It's funny. Sunrun, on their earnings announcement, because I actually went through Sunrun's the transcript. Has a lot of good stuff going for it, and so it really like popped up in price. But you know what happened? It dropped back down to that level of support overnight. This was the budget that has passed the House of Representatives. Now that budget isn't law yet. It's got to go to the Senate, and then if the Senate does any sort of revisions on it, then it's got to go back to the House. Basically, they have to reconcile and both agree on a budget before it even goes to the president for signing. The new budget bill that just passed the House of Representatives strips away this almost decade. It's actually more than a decade, isn't it? There's been a 30%. The government would subsidize solar purchases with a 30% tax credit. And that was set to continue with Biden's Energy Act almost indefinitely, at least for the next 10 years. And this new law that it's not a law, it's a bill, strips it away. It basically reverses that whole law and basically takes away the subsidy, the 30% federal tax credit on solar purchases. So that's why even though they had such good news at a company level, just the fact that the U.S. is no longer going to subsidize solar purchases, any solar company has probably seen in the last 2 days a drop in their investment because people are like, well, that was like the main driver of solar. Beside, that changes the return on investment from like 15 years down to 8 years, and it makes it palatable. People can't think 15 years in advance for finally getting the payback from their solar purchase. So yeah, that's what that's all about. Okay, so are you thinking that this is a buy? Well, here's the scoop, Caroline. This is all going to depend on, you're basically gambling here, depending on whether or not the Senate pulls that from the bill, whether the House agrees on it, whether that is a priority for Congress people and their constituents, right? So I don't know the answer to that. You might not know the answer to that unless you have some sort of insight. I wouldn't, if I were you, despite how good that conference call went and all the investments that they're taking from their solar purchases and putting it back into mergers, acquisitions, and all the good stuff that's happening with this particular company. I don't think at this point I would be buying this stock if for sure they decide to stop subsidizing, the federal government decides to stop subsidizing the increase of solar acquisitions here. So yeah, I'm going to tell you, even though it looks like a great buy point, we don't want to go with that.
Yeah, too much chatter in the news, not enough confidence in our strategies, and we definitely always want to be confident with that risk reward being very favorable, which is the beautiful part of investing, in that you have hundreds and hundreds, if not thousands, of names to choose from. If you don't see that opportunity setting up, step aside, find something else. Join a community like Trading Trainer. Join the mastermind call on Thursdays. Get some insights from, other just as enlightened individuals all around the world, and, maybe apply those strategies. So thank you to all for those names in the speed round. A quick shout out to Neil for joining us. Great show. I always take away a nugget. Neil, we appreciate it. I always take away a handful of nuggets, and hopefully any of the new viewers joining us can get some good insights from the info as well. So thank you. Shout out to Neil for joining us. The chatter on the financial news this morning was a lot of money managers, investors have already closed up shop heading into Memorial Day weekend, only to hear the tariff news and to kind of have to check in on things. Heading into the weekend, heading into next week. AJ, what are your thoughts? How should we position ourselves?
Well, like I said, a couple of shows ago, more than a couple of shows ago, we talked about some swing trading strategies. I shared one of my swing trades on Broadcom. Well, I think that everybody, just like me, should be keeping their eye on the pullback that we're currently having. We call this a retracement, and see where this pullback takes us. And in the meantime, spend this 3-day holiday looking for some possible bullish swing trades, underlying symbols that are setting up on the same pattern. And if we get that reversal here in that magenta zone, somewhere between 5,465, 5,655, so you've got basically $110 zone there. If we get our reversal on the S&P in that zone in the next week or two, get ready to pull the trigger on some of those swing trades. Just have them prepared, and that's what I think we should be doing this weekend, is preparing for plan A, plan B, and plan C.
Yeah, the acronym I've been hearing this morning is the taco trade. Have you heard that? The taco trade?
Tell me about it.
Trump always chickens out, right? So when he drops the tariffs, and then he sees the market reaction, and then he double backs. He's like, "Well, I didn't really mean it. We can discuss it. I'll extend it." Right? The taco trade. Trump always chickens out. I thought that was pretty witty. So thank you, AJ, for that wonderful insight and some great names and opportunities to look for this week. Thank you to everybody for tuning in and joining us. Once again, the links to AJ's socials are in the chat. Show some love, hit that like, hit that follow, hit that subscribe button. If you want to learn more about the program and everything going on at Trading Trainer, head on over to some of those other links. Check out the webinar. If you have any questions, feel free to throw it in the chat. Head on over to tradingtrainer.com. There's a contact section, or just send us a DM. Someone will get back to you. Otherwise, close the laptop down. Go enjoy some of the family time. We'll see what happens over the weekend. And then Tuesday, it's interesting because the futures markets are going to be open on Monday, but not the stock market. So, Tuesday morning, we could be in for, quite a little rodeo to get the ball rolling. But, if you have questions, if you have concerns, head on over back to the show next Friday. We'll be streaming. We'll be providing wonderful insights. AJ, I'm heading back to the West Coast. I've spent this week in Chicago. Excited about that. Hopefully you enjoyed your trip, because I know you were over in, the headquarters area, and you met
Colorado
with some former students. So hopefully that went well, which we may be having a few on here or there, which, you and I can discuss, but that's what we love to have, is to bring real people with success stories to come educate the rest of you all in the wonderful doings of what's happening over here. That's all I got for us, AJ. Thank you. Thank you to all. We'll catch you guys next week. Hopefully everyone has a wonderful weekend.
Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.